Hi everybody, my name's Rick Spooner. Welcome to this CMC Markets video where we take a look at some of the major events on this week's calendar and how they might impact markets. Well, in what shapes to be a pretty busy week as far as the economic calendar is concerned, I think one of the marquee or headline events for markets this week could well be the ECB meeting. Now, that's due at 10:45 p.m. Australian time, or Australian Eastern Standard Time anyway, on Thursday. Now, the background to this meeting is that the market went into the ECB's last meeting expecting that there was a good chance that, if not at that meeting, then certainly this year, the ECB would announce a move out in its deadline or minimum time frame for its current quantitative easing program. At the moment, it's said that it will continue that until at least March next year, but given that its inflation targets are still a long way away from current levels, there had been a general expectation that it would continue buying bonds at the full rate as a minimum, at least until the end of September next year. Mario Draghi surprised markets a bit last week by actually saying that the ECB had not even yet considered that course of action, and since then there have been papers and some market talk about the possibility of the ECB actually going the other way and beginning to prepare the market for a winding back of its quantitative easing or bond purchasing program, or tapering it as the Fed was said to do in similar circumstances. So this is a meeting where, possibly there may be nothing announced, but certainly markets go into this prepared for either possibility. And of course the middle ground one will be where ultimately ECB does in fact extend its deadline for full QE out, say until September next year, but then begins to tell the market that it's likely to start tapering things after that. So quite a bit of a prospect for volatility associated with this ECB meeting on Thursday, I beg your pardon. Now, a lot of markets are going to that in an interesting position. One of the major trading instruments, the Germany 30 CFD, based on the DAX, is amongst the more interesting of these. You can see that the DAX has formed into this quite neat downward sloping trend channel formation over recent weeks. So one of the possibilities here would be a bit of another blip up towards the resistance of this before rejecting it again. That could easily set up for another bearish pullback, possibly down towards the support of the channel again. The alternative, of course, would be a break through the top of it. That gives a possibility of a test of the highs around recent highs around 10,812, but it would probably really take a break above that to get chart followers really beginning to get seriously bullish about the DAX from current levels. Turning into economic statistics and beginning or other events and beginning here locally with the Australian data, I think we'll get a couple of Reserve Bank announcements, if you like to put it that way, tomorrow, Tuesday morning Australian time. The new RBA Governor, Philip Lowe, is due to make a speech just after 8 a.m, which will canvass inflation and monetary policy. So quite likely there that he might make some background comments about the RBA's overall thinking and his overall thinking on how things are. That will be followed at 11:30 by a release of the minutes of the last RBA meeting. Now the markets go into that with the RBA having not only not changed rates, but really adopting what seems like a pretty neutral stance as far as any signalling any near-term intentions for rate cuts are concerned, and really giving no real indication in the latest statement following the meeting of any future easing bias. Then on Thursday as well, here locally, we'll get the release of our employment data. Now the market basically is going into that expecting last week's figures to be unwound a bit with a bit of a bounce back in the other direction. So as you can see here, the market's looking for an increase in the employment growth to 15,000 following a drop or a cut in jobs of
about 4,000 last month, but at the same time for the unemployment rate to nudge up again to 5.7% from 5.6%, probably with an adjustment to the participation rate. Well, that basically means if things do pan out as far as the market is expecting, that we get a sort of a steady as it goes trend in the Australian employment situation, jobs growth around about 15,000 a month on average over the last few months, and the unemployment rate basically pretty steady, although it moves up and down a little bit from one month to the next. As far as the US is concerned, of course, markets go into any US data now against a background of a general expectation, I think, that the Fed is likely to increase its rate in December. Probably a couple of the key figures this week will be industrial production. That's due very early on Wednesday morning Australian time. Now again, this is one of these figures where the market's looking for a little bit of a bounce back from last month. Industrial production in the US was down 0.5% last month, largely attributable, I think, to warm weather and the impact on utility providers. So looking for that to be up 0.2%, but even if it is up 0.2%, the overall picture there in industrial production is one of pretty weak trend growth, and that reflects that weak global trade position we saw reflected in China's trade data earlier, or late last week, I should say. And I think one of the other important bits of data for the US will be their CPI data. That's on Wednesday at around 11:30 p.m, so late Wednesday night Australian time. Now, one of the key figures here, it will be the yearly CPI figure, ex-food and energy. That's currently at an annual rate of 2.3% and expected to be unchanged, but the market will be very sensitive to any increase in underlying inflation in the US, because that would really start to firm up expectations that the Fed will move in December. And then finally, I think markets will very much have a watching brief on data from China this week. Firstly, we'll get news on China's aggregate financing. That could be in the next borrowing in the next couple of days. That may give some insight into how much authorities have begun to tighten up on property credit. But the big numbers, I think, will be on Thursday. The market's going to be looking there at GDP, which is expected to be unchanged around 6.7%, but also very much at industrial production, retail sales, and fixed asset investment. And I think market interest in this has really been heightened now by that considerably weaker than expected export data we saw last week. So the market would certainly be sensitive to any of this data, particularly industrial production and retail sales that happened to miss expectations to the downside. That could be a negative for commodity prices and a negative for commodity-related currencies such as the Aussie, Kiwi dollar and the Canadian dollar.